Hey everyone, and welcome back to Data Driven Value, where we show you the tools and we teach you the skills to help you take your financial freedom into your own hands. Today we're just going to get right into things. So the market's experiencing a little bit of a bounce here. So we're just going to take a look mostly at charts today. Going to look at the miners in specific as well as some of the altcoins that we were charting over the previous kind of recent videos. So we'll just take a look here. We like to kind of look at the broad asset class from a whole kind of as a base perspective. So we see here looking at our indicator risk dashboard. So here again, you can see the risk is here in the red line. So red is the overall risk of the cryptocurrency market. And then we see this blue line is the Bitcoin price action. So you see basically every single market cycle you see where the risk comes up to these elevated levels up here and then how it coincides with the actual market cycle top. So dating back to 2011, this has essentially been a really good model to gauge kind of the general risk. Obviously, we get to the high levels when things get really euphoric. So during those mania phases that I previously talked about, that's where you see the risk really start to get elevated. It will be interesting to see. We do see kind of as time has gone on, it's been less and less risk. So obviously, the newer the asset class, the more risky it is because it doesn't have that same price history or as well kind of the same financial backing or liquidity that it does have today. So Bitcoin here in 2011, Bitcoin was the price here. Obviously, we see, it's $17. So it's pretty interesting just to see the evolution of Bitcoin, how it went from elevated risk, so like as risky as it can get almost in its whole history, and the price was $29. And think of it today, like the price is over $100,000. That's insane price appreciation. And look at our risk level. We're right down, we're below zero point 0.5 risk. So we're actually less risky than more risky when you look at it from a market cycle perspective, which is really bullish considering that Bitcoin's such a high price and the risk is still relatively low. That's why kind of buying into Bitcoin or crypto based on risk can be a really good strategy. A lot of people really get fixated on specific price points and then they get kind of disappointed if the price doesn't come back to their targets and they aren't able to get their entries. For me personally, I do like to pick technical levels that I do think are going to be retraced for my entries. That being said, I do also kind of adopt a blended strategy of buying on technical factors as well as DCAing. So kind of DCAing based on the risk factors. If you're DCAing down here, it's really up to you. I mean, you could DCA under zero point 0.4 risk and you could take profits above zero point 0.6 risk. And then, yeah, there's nothing wrong with that. Or maybe you're just DCAing under zero point 0.2 risk and you're kind of targeting the lows of the bear markets. And there's nothing wrong with that. Again, we all have different strategies and we're all going to have different plans and goals. So nothing wrong with that. But just kind of showcasing here, yeah, we're not overheated, and you can see this is kind of more indicative of a cycle top. We do see, again, how I mentioned, we're kind of losing a little bit of momentum in terms of how extended this risk metric gets in terms of each subsequent cycle. The reason I kind of think that is obviously as the price appreciates, you need more and more liquidity to move those prices. So to get to those extended risk levels, we're really going to have to kind of see price appreciate pretty quickly. That's where we might see something like this. But again, just watching this, I almost think of this like a trend line. So if we have a down sloping trend line from this cycle to this cycle to this cycle, we might only get to a point, maybe about zero point 0.8 risk. We might only get between 0.7 and zero point 0.8 risk for this cycle. And that could be a cycle top. So that's something we want to keep in mind here. We do see, though, just because it gets to these elevated levels, it doesn't mean that is the top. So you can see it doesn't perfectly call the top. That's why we kind of use a bunch of different indicators to give a good idea if that top is likely in. Otherwise, we're just kind of keeping an eye on this. And yeah, we do see we're not very risky right now, but we're kind of in that no man's land chopping around. So if it's within your DCA strategy to DCA under zero point 0.5, by all means, all the power to you. My personal strategy at these levels, I'm kind of basing more on technical levels. So I'll just add as it comes to my technical levels, but I'm super happy with my current exposure to the market. And I'm also happy with my cash position in the event that we do get a broader market breakdown, that I will be able to take advantage of that opportunity. We do see here, obviously, if we zoom in, our risk curling back down. So yeah, we may be, again, just kind of going down. So when the risk is trending down, we're generally looking at kind of this sideways consolidation price action. That's what we saw prior. So again, maybe we're just due for that consolidation. I argue that for kind of a normal cycle to play out into Q3, Q4, I would like to see more consolidation around the current levels. Maybe we kind of just range between 95 and like 110,000. Really build out that support, build the base, and then we can make our next move up. Kind of the higher we go with less consolidation, the more likely we are to experience that flash crash back to reality. So that's kind of what we call that left translated cycle, kind of blow off top type scenario where we just shoot up without kind of building that support, and then we come crashing back down to the actual support that we've built down here. So just watching that. We're going to get a little bit into the Bitcoin miners. So the main reason I'm just talking today, we saw Grayscale launching a new Bitcoin miner ETF. So we follow WGMI, but there is a new miner ETF on the New York Stock Exchange now available to investors. So more exposure. And yeah, we just see here the new product is called the Grayscale Bitcoin Miners ETF. Trades under the ticker MNRS. The exposure exposes investors firms to operating within the Bitcoin mining system. It's basically comprised of companies that are listed on the INDXX Bitcoin Miners Index, which is a benchmark that tracks global mining firms generating most of their revenue from Bitcoin-related activities. So we see Marathon Digital, the largest allocation at 16%. Not surprised to see that. They also have the largest institutional holding by quite a bit. They're kind of around 60% institutional holding, so definitely see them up there. Riot also 12%. Core Scientific 9%. It's interesting that they actually weighted Core Scientific quite heavier than someone like CleanSpark, just because they're saying here this is basically tracking the mining firms that generate most of their revenue from Bitcoin related activities. Going forward, Core Scientific is actually going to be generating probably more revenue from their AI HPC business than their Bitcoin mining business. But that being said, it doesn't change my fundamental view on any of the miners. I like Marathon. I like Riot, I like Cores, I like CleanSpark, I like Iris, I like all these companies at the right valuations, and kind of, yeah, so just we follow the fundamentals and then we buy based on the relative undervaluations, but just interesting to see how they've weighted the ETF. I would have liked to see CleanSpark a little bit higher. I definitely think they're a much stronger performer than Riot, especially from a fundamental perspective and a growth strategy perspective. They've way outperformed Riot, so we'll see kind of going forward if they do increase that allocation, but yeah, nothing to worry about. Obviously, kind of the more experienced investors within the space, we're not buying these ETFs. We buy individual miners because you're able to kind of leverage your returns. Generally, they do often outperform the actual broad market ETF because you'll have laggers and you'll have outperformers. And I think that's based on the fundamentals as well as the catalysts. So really focusing on their growth strategies as well as their current mining fundamentals. See here, this ETF highlights the critical role of Bitcoin mining in supporting the broader crypto network. Miners are essential to Bitcoin's transparency and long-term security. So I've been saying this for months. I don't know how you could be bullish on Bitcoin but bearish on miners, because miners are essential to the network. Bitcoin as a network does not exist without the miners, and some of these miners are able to mine Bitcoin at such a cheap cost that if you're bullish on Bitcoin from a price appreciation perspective going forward into the future, I don't see how you could be bearish on these companies considering the assets that they're holding at the current valuations. So some of these companies, they're barely even valued at their book value in terms of what their data centers and their actual assets and infrastructure is valued at. And even more on top of that point, their data centers are actually undervalued from a traditional data center perspective. I talked about that in our miner video. I'm not going to get too far into that, but basically I just see that there's a massive undervaluation of miners, and there's a lot of price manipulation from the short sellers, so that some of these companies are 20-30% shorted. Generally, it's just being able to keep that price suppressed and profit on those shorts because the market caps are so small. But then again, we talked about the alternative side where you get a short squeeze. So one of these companies comes out with some big news that they're expanding their operations. People start buying, shorts start covering, and then you start running up like crazy. We've seen 100, 200% weeks. We've seen multiple double-digit gainer days throughout last bull market. We've seen it this bull market as well, but we haven't got to that parabolic stage that we saw last cycle, and that's what we're really trying to position ourselves for. But again, I just don't see how you could be bearish. I mean, you can be bearish on some of these miners. Not every miner is the same. Not every miner is profitable, and not every miner is efficient. So I get that there is more risk in this space here. You really kind of have to follow those fundamentals to make sure the companies that you're buying in are really positioning themselves for the future, and then they're not going to kind of run into headwinds or run into some financial issues in the near term if there was an unexpected downturn. We did see a lot of Bitcoin miners go bankrupt or kind of have to shut their rigs off during the bear market because they just weren't profitable. That's when we see miners like CleanSpark. They really took advantage of that. They bought distressed data centers, they plugged in new rigs, and they were able to scale their hash rate far beyond their peers. So a really great job from them. That's what I like to see. But obviously, again, focusing on that fundamental performance first and foremost, finding the technical backing and then pulling the trigger when the price comes to those levels is how we're going to position ourselves. We do see here, obviously, it's a passively managed fund. The Bitcoin miners remain the network's backbone and positioned for significant growth as adoption increases. So again, that's kind of my theory that you can't be bullish on Bitcoin and bearish on profitable miners. That being said, last year was a tough year to navigate. Obviously, there was a halving event, there was a 50% increase in network hash rate, and there was a 50% increase in difficulty. So rewards were drastically affected last year. So yeah, seeing the miners come out of that, it will be nice to see going forward into 2025 with the FASB accounting. Some of these miners that have 10, 20, 30,000 Bitcoin on their balance sheet, it's going to look a lot more enticing, especially at the price that they acquired it for or that they mined it for. So we'll just be watching that going forward, but I do expect some pretty good earnings. I also think that with kind of MicroStrategy as well. We do see here, this follows a growing political interest in Bitcoin mining. So we see Donald Trump, I've talked about this as well, advocated for increased domestic Bitcoin mining efforts. He said he wants all Bitcoin to be made in America. It's kind of an unrealistic expectation, but you get the point. See his team engaged with large miners. It's kind of funny they left out CleanSpark again here. I'm not sure why they kind of keep leaving CleanSpark out of this, because CleanSpark was one of these executives that met with them. They've actually met multiple times, and CleanSpark executives do have some relationship to Senator Lummis as well, who's a big proponent of the Bitcoin Strategic Reserve. They are kind of from a similar jurisdiction, so just be watching this going forward. But essentially, they're exploring ways to boost domestic mining operations, enhance energy security, and create jobs. So we also talked about Trump saying expedited regulatory approvals for any company investing at least $1 billion within the U.S. And that's going to be every single major Bitcoin miner is going to be investing over $1 billion within the U.S. in 2025-26. So just following that going forward. So just jumping quick into this, I want to kind of allude here. So I did talk about in a previous video just some target levels that we were watching for the different miners, and a bunch of these levels did actually hit on that big crash we saw. So we saw the market dump out. We saw AI stocks get hammered. We saw miners, crypto, everything just got decimated that day. For some reason, the miners sold off extra hard. They sold off for like 30%. Some of them were getting hammered as much as AI companies. You can kind of understand it with some of the companies that are pivoting, like Coors and Wolf, that are pivoting kind of a lot more to AI. Iris Energy dumped the worst, or one of the worst out of all of them, which is kind of interesting because they haven't even announced that they have any AI deal in the works. Essentially, they're still just building out their facility. If they want to run Bitcoin miners, that's what they're gonna do. They're gonna do what's most profitable. They're not rushing into any deal. But it's kind of interesting that the market reacted so negatively around Iris Energy when I don't think it really had any change on the fundamentals at all. Obviously, there's still going to be major demand for the actual AI data center infrastructure going forward, which is what Iris is providing. I think there's a lot of competition in the large language modeling space, so that's where we see all this competition between DeepSeek and Alibaba and OpenAI, that kind of thing. That being said, that's all the models. So these companies still need the data center capacity. It might not be valued at as high of a premium as it previously was just due to this new news surrounding efficiency. But that being said, again, AI demand is just going to increase and increase and increase. And these data centers are going to be necessary to kind of be able to support the amount of infrastructure that's going to need to be brought online to stay competitive in that space. So we're just going to jump over to the charts now, but I just wanted to show you, obviously, we had our DCA, kind of our first entry range, our additional entry range, and then our high time frame entry range. So I'll flip over here. Obviously, we saw just a huge dump here, 30%, about 30%, 27% in the ETF here. That's just a buying opportunity, in my opinion. Getting it bouncing from this 618 here as we did in all the prior rallies. So I've showed you that before too. We'll just touch on that quickly. Just looking at this, we've had a bunch of opportunities to accumulate miners this cycle. So again, we saw this rally retracement entry, rally retracement entry, rally retracement entry. Same thing all the way up here, and we're back in that same golden zone. We had a nut, so we came down, hit that golden zone, bounced quite well, and then just this big FUD event has already just sold us off back into there, and we're already kind of recovering a little bit, which is nice to see. But yeah, pretty golden buying opportunity there based on FUD. When I talk about the miners, I do say they're very volatile, and one kind of bad FUD event or news event can really just knock the stock down. Same thing, like you can't expect these miners to go up 25-30% in a day and not be able to go down that amount in a day as well. So obviously we saw miners wicking down back to that golden zone, getting bought up and back up kind of towards that zero point 0.5 Fibonacci. But again, another awesome buying opportunity for miners in my opinion. If you weren't scared out of your position, so I just position myself in the fundamental companies. I don't buy my investments based on AI news hype potential. That's why I recognize there is that potential for that catalyst, but I'm gonna base my actual investment on the fundamental aspects of the mining business in itself and the kind of growth trajectory. And then anything that's hype based or news catalyst based is just icing on the cake, in my opinion. I'm not gonna invest based on speculative hype. That's what I always say. But obviously, we're seeing some recovery in the SPY. Bitcoin's recovered back kind of up, pushing 106,000. It was above 106,000 for a bit. Everything's green across the board except the US 10-year and the dollar. So again, the gold's pushing its all-time highs here. It looks like it wants to break out. So gold doing very well, Bitcoin doing very well, and then we've seen kind of the stock market start to bounce. At least experiencing a little bit of relief after that steep market sell-off. That being said, we're just taking a look at this on the lower time frame. So we see here, we had that big dump out right through here, came back, and then we just recovered it. So we put in that higher low. We've actually broken this high. So watch for that subsequent higher low here. If we do print a higher low right around here, we managed to hold these lows. That's that's 3 points. We do have a confirmed potential trend reversal on the low time frame. It's going to be risky, obviously, because it is a low time frame move. So if we do see something like that play out, you'd be looking at your long position around here, maybe holding up to the previous all-time highs with your stop loss below these lows here. And then you can see that's a 3.08 risk reward trade potential. Obviously, as we're coming down to these levels, you want to take a look at your RSI and your MACD. Make sure they're in oversold territory and it's likely to bounce. Otherwise, yeah, we could just come down, break this low, and then resume our downtrend structure. So just watching that, there is a little swing potential for the SPY there. If you're feeling kind of spicy, you want to take a trade or something. I'm not personally going to take this trade. I'm just going to wait for the confirmation, see what goes from there. I did buy some miners and some other different positions over the last couple days, so I have been kind of dipping my toes, but at the same time, I do kind of recognize we're still stuck under this resistance, and we still have this all-time high that we need to take out. So just following that. We do see here TLT, another one that we are watching. So on the low time frame, kind of coming below our 786, breaking back above it, coming back, tagging it, bouncing from there. And then again, we are in that lower time frame trend reversal structure. So TLT is looking good. Again, we want to hold these lows right here around 87 for a continued upside move on TLT. But again, that's one we've got a spot position holding that, kind of a hedge for any potential downside. Flipping over to the miners. Obviously, we touched on WGMI. I'll just flip through all the individual charts. You can kind of get an idea. So here, beautiful move. We saw a dump back down between our golden zone, bouncing from there. So great move. Even if you just bought the middle of the golden zone, which is a lot of the times, that's what I do. I'll spread my buys out. So either I put one buy here and one buy at the 786, or I'll do one buy at the 618, one buy in the middle, and then one buy at the 786. But you can see here, even just from the middle of the range, a really good move. So 10% off the lows, taking out those highs. We're probably going to come back, retest maybe this support zone here or the 618. Look for that higher low bounce and continuation to the upside. Mara hit our zone perfectly. Riot, another one, came down right below our first level of interest. RSI MACD bullish cross curling up. Look at that volume, beautiful volume there. Yeah, another level perfectly hit, bouncing from that, moving on, looking at Clean Spark, another one. Look at that, guys. Like, look at these zones. Like these, I've been buying these miners in these levels of interest for years now. Like this whole bear market I just showed you, we've had so many opportunities to accumulate these miners at these large Fibonacci retracements. While other people are getting scared out of their positions after these dumps, they should be buying down here. The problem is they're buying up here and then they're riding all this momentum down and they're getting scared and they capitulate this first chance they get. So you don't want to be that guy that's buying high and selling low. We want to buy low and sell high. I know it sounds easy. It's hard to do if you just invest based off of emotion and you don't make a strategy based on any kind of fundamental or technical analysis. But obviously, CleanSpark bouncing from our level of support. Cypher, another one. Look at that, guys. Bouncing from our support line marked here. Just really good job kind of targeting those lows. Bitfarms broke below our support. So Bitfarms, again, we talked about. It's been such a lagger this cycle. Don't really know how it's going to do going forward. I'm personally not very interested in Bitfarms. I'm just more interested in other miners right now. Their management hasn't wowed me from a fundamental or growth perspective. You can see here, this is massive resistance we're coming into. We're still in that downtrend structure. And then, yeah, I do expect we're likely, again, it's kind of getting a little overheated on the 1 hour here. It looks like it's curling back over. I think we just reject for Bitfarms. And then we'll see if we can hold these lows. But I'm kind of just, not interested in Bitfarms at this point. Just my opinion. Looking at Hive. Look at that, guys. Beautiful. Another one from our level of interest. So, yeah, look at these. Like, beautiful back test. Hopefully we can take out these highs and then come in, put that higher low, maybe at the top of the support zone. Or if it goes even higher, then we'll have to just pull our Fibonacci, see where that level lines up. But another beautiful bounce, that long downtrend breakout retest of support. So, really good job. Hut, another one. Didn't quite hit our first level or hit our broke through our first level. I did say this one was quite a high risk level and that I wasn't personally interested in it due to the overextension of Hut relative to the rest of the market class. So coming down, just missed our other zone. That's okay. Obviously, we're not going to be able to hit them all, but if we have pretty good accuracy and we can get a lot of entries, then that's awesome. We do see here Iris Energy breaking below our first level of interest. Again, we talked about this one getting hammered a lot harder than some of the other ones, kind of irrationally, in my opinion. I still think they're very great from a fundamental perspective. They still have the industry-leading efficiency and the industry-leading cost to mine, and they have a massive pipeline coming online, and they actually have good, consistent execution of their growth strategy. So I do expect Iris Energy to continue on with that, and I am a big holder in them. That being said, we're kind of coming into this first zone that I marked, so this might be resistance. We could just come back, do a bit more consolidating down here. Hopefully, ideally, yeah, we want to hold these lows, higher low, continue higher. Moving on to Wolf. Wolf was another beautiful one. Came down below our DCA range again, came down to one of our higher levels of interest. So this was more of an accumulation level here. This was that high risk DCA level. So I always kind of give you a few different levels. I'll give you a high risk, a medium risk, and a low risk, and then kind of it's up to you what you do at each of those levels. Obviously, we both have different strategies. I just like to weight my buys larger on the lower risk levels. So see, it came down here, bounced from this level of support, but again, we have this upsloping trend line that we're now contesting with as resistance. Moving on to Core Scientific, we see another one came through. It did break through our zone, didn't quite get to our lower level here, and it's just back testing this support. So again, another one that we're just watching because it is coming back into resistance here. So we want to see that break out, put in that higher low, and then we can kind of try to continue our trend to the upside. Yeah, Bit Digital. Again, came down right around here. Nice support, holding these lows through here, holding this trend line. But again, just watch this support zone, how it reacts. Watch for the higher low. Enter that higher low if you're looking for that swing position. If you want to protect yourself, put that stop loss, either just below these lows, or even if you can get it below this trend line here. If you're comfortable with kind of that kind of downside, that might be a good little swing trade for Bit Digital. We'll move over to Coinbase. Came down, bounced from its bull market support band. So hopefully we can just take out this high, come back, retest this, and continue up. MicroStrategy is one. I'm currently in a trade. I also have a spot position in MicroStrategy. I shared this on my Twitter. or my X. So if you do follow my X, I will share different setups as well over there if I do take them. So obviously we saw this long downtrend coming back to the 786. That's where I enter the spot position, and then we see we came up, we put in that higher low within the golden zone. So you can even add to your spot position here, or if you wanted to wait for like basically, if you really wanted to wait for the confirmation, that would be your play here. Is this is where you would enter. You'd wait for that first low, wait for that confirmed higher low, and you'd enter here. I mean, I personally just thought MicroStrategy was good value, kind of around 290. So I bought just a small spot, not small, but I bought a spot position around 290. Rode it back up. I'm still holding it. We came back here, so I've added to it, and then we broke out. We came back to this support zone here, so I've added to that again on a swing basis. So now I'm holding a swing position from here, from this zone here, and I'm holding a spot position from this zone over here. So you can see how I've used the two different strategies to kind of increase my overall exposure without having to kind of put it all into the market at once. So I only entered, if I enter a third of my position here, that's only risking 1/3 initially. And then I enter my other third when I get confirmation, because I'm more kind of, I kind of think that we're going to continue up. And then I enter my last amount right here. You end up with a really nice blended adjusted cost basis right in between. And then we just ride that macro move back up, and we have a stop loss protecting it if that's kind of within your strategy. I'm just going to go into Galaxy here as well. So again, a nice one coming back to our level of interest, bouncing nicely. So again, a beautiful kind of call there for Galaxy. But coming into this, again, if we get rejected here, high or low, watch for that price action and go from there. And then DMGI also, it's still in that downtrend, so we weren't interested really in buying DMGI because of that technical downtrend. And again, we're still just in a same thing here. We did hold the lows right through there, but it's not convincing enough for me. This is a low time frame, so we flipped to the and flipping over to crypto and the altcoins, we just chart a bunch of different coins yesterday and look at some levels. So I was talking about Ethereum. I do like Ethereum between 3,000 and 2,700 as a swing position. I've mentioned that a couple times in my videos. We do see here the RSI on the 4-hour kind of curled up, or curling back over, as well as the MACD. Looks like it could be curling back over as well. So I do think that we are just due for more consolidation. Ideally, you want to put that higher low in here, and then higher high and keep going. But beautiful to see Ethereum again bouncing from our swing position here. Moving on, we'll take a look at ETH Bitcoin. So also getting a little bounce today, but again, it's not convincing enough right now. We want to see that higher low, higher high, higher low structure, and then we have the potential to kind of see if we can't reverse, and then we got to get back to our bull market support band, gain that as support, and continue on from there. So still watching ETH Bitcoin. Doesn't look to be bottoming quite yet, but did tag our zone of interest and has bounced from there. So that was a good level to swap Bitcoin to Ethereum, as I mentioned in the previous video. Moving on to Solana here, came back down, bouncing, taking out this high, holding the lows. Didn't quite come to the 618. That's when I talk about the margin of error. So you see here, if you didn't buy Solana because it was 1.5% off of your target entry, it's kind of just a little silly in my opinion. I feel like just having that margin of error just allows you to just be a little more flexible with your entries and exits. In the long term, 1.5% is not going to make a difference. But if Solana were to break to new all-time highs, you'd be kicking yourself if you didn't get in because it was 1% above your entry or your ideal entry. So kind of take it with a grain of salt. I do have different positions where I just have limit orders, and if they hit, they hit, or if they miss, and that's okay. But in terms of my long-term spot positions, I'm okay with just kind of having a little leniency in terms of my entry and my exit in terms of a few percent. Bouncing nicely from there. Obviously, we see AVAX here. Again, didn't quite come to our level of support, unfortunately, but we haven't taken out kind of the downtrend structure, and we're stuck under this bull market support band, as well as there's this level of support through here. So there's just still our resistance. We still have quite a bit of resistance for AVAX to kind of take out before we're able to reverse that trend structure. Ideally, yeah, maybe we just regain the bull market support band as support with that higher low, look to move from there. Near came down to our 786 level and is bouncing, so nice again. But we do see, we're in that structure. So until that changes, I mean, it could change on the low time frame, and it will first. So you would see kind of this start to play out on the lower time frame, something like that. Eventually, that's going to translate to the higher time frame, and it's going to be like that's our trend reversal. If you wait for confirmation on the high time frame, like the 3-day or the weekly chart, you're not going to have as good of an entry. But that being said, if you're using confirmation on the lower time frame, it's a little bit riskier because you don't have that high time frame confirmation. So what I like to do is I just like to follow it on about like the 4 hour and the 12 hour, and then I look for kind of a daily trend reversal. So I want to see the multiple higher lows and highs on the daily chart, and that's really going to signal to me that we likely are headed for kind of a broad reversal move, kind of on the macro scale. So near at that level, Sui, this is what we talked about. So yeah, beautiful breakout back above this trend line. Let's look for that retest of the trend line, look for that higher low, and then we could potentially go on our next leg up. So Sui looks good right now, but Injective, another one we talked about. So yeah, we did say this was very good value yesterday for a cycle spot position. Anything around, between this 786 into this support zone, I think is worth accumulating Injective. Seeing a little bounce here, obviously again into what is now resistance, and we want to take that out higher low, continue up. You know the drill. Pepe, this is another one I highlighted on my X account. So I'm in this trade. I bought my spot position here, and I'm just riding that right now. I see bouncing from that 786, similar to the prior two rallies. And again, this is my strategy. You buy your spot position in the golden zone, and then you add to it on a swing basis on the breakout. Same thing here. Same thing that we're planning to do right here. And then, yeah, so Pepe looks good. Our trade is running in profit. So great call on that one. Doge, again, look at this, guys. These Fibonacci golden zones, they just love to call the bottoms. We see here 786 bounce from there. RSI and MACD looking very good for a setup there. If we flip over to the 1 hour, maybe a little bit more, yeah, a little bit more extended on the low time frame in terms of RSI, but it's still not that bad. Like, they definitely could move up here, and nice to see that they did kind of break out of this and hold this as support. So yeah, just beautiful price action. Nice to see them break above the bear flag rather than breaking down. Some of the other altcoins actually broke down and are facing this as resistance now, whereas Doge is actually facing this as support, and they do have that kind of uptrend structure on the low time frame. So watching how that translates to the high time frame, and then again, look for that continued uptrend structure and look for those additional entry opportunities. Looking at Brett, another one, beautiful, just beautiful. Comes down to our level of support, acting as support again, bouncing. So nice move from Brett. Going on, we see Link. Link came down to that 0.5. So that's what I did mention. The 0.5 can act as valid Fibonacci retracement. That being said, I do like to weight my buys kind of lower down. But yeah, if it is relatively strong compared to the rest of the asset class, then a 0.5 retracement is valid. Ondo, that's one I've been a pretty big bull on as well. So we saw here, we came in, we had our Fibonacci spot position, we broke out, we had our swing position, we got another opportunity to add to our swing position, and we got another opportunity to add to our swing position. So now we've got a pretty decent sized Ondo position based on this spot, as well as multiple opportunities to add on a swing basis. And we've broken out. You see how we broke out, came back, retested that Fibonacci golden zone again, and then took off from there. So just beautiful price action by Ondo. Also saw how I said that I wanted them to take out this high. They've done exactly that. So taking out that high, retesting it, continuing that uptrend structure. Ondo looks really good. Super happy with that position right now and just holding that to new highs. We talked about this. This is just crazy. Look at these. Look at these moves. Came back, retest, and then just another God candle. So is just insane. We didn't catch that one because it was already quite overextended. You can't catch every move. You can't expect these all the time. And the more I see these appear in the charts, the more it kind of makes me a little bit weary of that actual asset because it's so overextended. And I've seen so many coins this cycle where it's the new hot thing. It's the coin of the week. It goes up and up and up, and then eventually it just experiences the same bleed that every other altcoin does. So great job if you did catch I personally did not catch this move. It's hard to anticipate a candle like that. That being said, we'll still just watch it for continued opportunities. Moving down to Fetch AI, also bouncing again from right around here on our support zone. We do want to see that bottom structure form there. Virtual, another one I've been a little bullish proponent on. I do have a position in them. I got stopped out of my swing position, so I entered a spot position here We broke out of this downtrend over here, and then it retested, so I entered a swing position to supplement my spot position. We ran up. I didn't take profits. I should have taken profits. I did move my stop loss up to my entry. So when you see a move like this take place, and you have an entry down here, just make sure that you're taking your stop loss and moving it up to your entry so that you can protect that position. You don't end up going round tripping from gains to losses. Obviously, came back down, hit my stop loss, stopped me out. I didn't lose anything on that trade, and then bled back to my basically back to my spot entry, and just allowed me to buy more spot virtual. So still just adding on a spot basis right now, waiting for that breakout and retest, and then we might try that swing trade again. But virtual looks good. We're just buying that spot. AIOZ, not as strong as some of the other ones, and again, just into resistance. Looks a little bit weaker than some of the altcoins, so we're just going to pass on that one for now. Flipping over to Tau. Tau looks good. So look at this. Again, we're talking about that breakout back test. So hopefully we can just continue higher. We want to take out this highs, keep those higher lows, and then maybe be able to regain the bull market support band as support. But Tau looks good. Again, came to our level of support and out. And then flipping over to Arrow. We talked about Arrow yesterday. Again, I did say Arrow was good value. And look at that move there. Like beautiful move and taking out that high, higher low. So great job by Arrow. You can see just see a lot of these entries that did kind of present themselves based on the levels that we chart, and that's why I look at those levels, because often things do come back to it. There are instances obviously where we don't see our entries, but that's why we chart so many different things and we're following so many different things. It gives us lots of opportunities to acquire strong assets. If you miss something, don't stress, don't chase, don't FOMO, just make up a plan, follow the technicals, buy strong fundamental assets when the valuations are cheap. It's that simple, guys. Don't overcomplicate it. Don't wreck yourself. And then let's make some money together this alt season. I don't know when it's going to start. That's kind of, I'm going to be here charting as we go and building positions. I do think we're closer to obviously an alt season than we are to a bear market. That's kind of my base case right now. So keep your head on a swivel. Keep looking for these opportunistic entries. And until the next one, I'll see you later, guys. Thank you so much. If you like the content, if you learned something new, please subscribe, like, share. It all means the world to me. I'll see you later, guys. Bye.